Folks, it's hard to believe the year's nearly over. What does the rest of 2019 look like for the S&P 500? There's tons to consider. China trade talks, bond yield plunges, and growing signs of a possible global recession. So what's ahead? What should you do to keep your portfolio safe and primed for 2020? Here's my forecast. Don't miss it. First off, if you've been following me for a while, then you're familiar with my successful 25-year history in the markets. And you know that my predictions are right on point. And they've been especially accurate this year. So after I share this forecast, I know I'll get a bunch of emails asking me what strategy I'm using for the rest of the year. So here's what I did. I created a briefing for you. Click the button below. At the bottom of this page, check it out now. Hey guys, I'm inside the lab. I wanted to show you on charts. I could talk and talk and talk all day long, but I wanted to actually look at some charts with you so you can actually see what I'm seeing and that we're on the same page and you can see what I'm expecting for the remainder of the year. So this is the S&P 500. This is the E-mini S&P, but it's this. If I was to put the SPY here, you would see exactly the same thing. They follow each other. It's the same song and dance. So this is the SPY. This is the S&P 500 on a weekly basis. And if I go further, if I go to 10 years, I can go on a monthly basis. But for this analysis, I want to start off with the daily basis. Right now, what we're seeing is a flat top formation. The S&P has been in a stagnant pattern for the majority of the year. Now, there is a small chance we're going to go higher right now because there's no resolution with trade war. But there's a good chance that there will be a resolution before the end of the year. And I'll explain to you why. The closer we get to elections, the more vulnerable President Trump becomes in his negotiations, because the more there is a unforeseeability in the negotiations, the more fragmented the stock market will be. Let me show you what I mean. This is the Russell 2000. Okay? This is the small caps. Look at the price action since February of pretty much the beginning of the year, if you will. Congestion. Now, why am I looking at small caps? Why are we looking at small caps right now? Because small caps are much have a greater influence on the trade war than large caps. Think about it. A large cap stock like Apple or Amazon, they have 1 million products. They have 1 million contracts. If one thing or two things gets tariffs, it's okay. The company can survive. Even if a product gets blacklisted, they can survive. But a small cap company can't do that. They're usually one-trick ponies. So that's why we're seeing the impact of the trade war much more on the small caps than the large caps. But here's the problem. Imagine a person walking a dog on a leash. The S&P 500 is like the dog. It's running around. And the small caps, they represent a lot more of the overall stock market. If you look, for example, if I show you momentum levels right now, this is the overall stock market. Right now, the S&P is near all-time highs, but the overall stock market, only 52% of stocks in the overall stock market are trading above the 200-day moving average. So the S&P 500 is, as you'll see right here, is overinflated by a huge percentage. 68.65% of stocks in the S&P 500 are trading above the 200-day moving average. So 68.65% versus 52%. The overall market remains vulnerable and choppy, as you saw the small caps, where S&P 500 is moving higher, or at least appears to be moving higher. So here's what I believe is going to happen. I believe we're going to see some progress on the trade war as we get closer to the year, literally closer to maybe second, third week of December. Till that time, I'm expecting more congestion. But here's the thing, and here's the beautiful part. Interest rates are near historic lows. So while I don't see the stock market screaming higher and making new highs and just breaking records, I'm not seeing much downside. I think the worst part is behind us. And in fact, I believe most of China is already priced into the market. Because you know what? The small caps, they've had a long time to fall down, and they haven't. They keep bouncing back and forth. And usually, after a long congested period, the stock market moves higher. If you notice, the best moves occur after a strong period of congestion and consolidation. So I think over the last year, because the interest rates have been so low and moving lower and lower, they dampened the downfall of the stock market. And instead of stocks falling, they've been moving sideways. So as soon as the stock market begins to see a resolution of the trade war, it'll begin trending higher. What I would do is I would wait till we're strongly above the 302, 305 level and remain there for quite some time, and then pull back to the 50-day moving average around the 295 level. So wait for the market to move higher to prove itself, wait for it to pull back, and then go long after that. All right? And I'll keep you folks updated. So what strategy am I using as we wrap up this year? Click the button below now to find out. There's one stock that you definitely need in your portfolio, and I'm giving it to you for free. No one's watching it, and it's supposed to explode before we ring the new year. Click the button below now to find out. Bye.